Hello everyone. This is the pre-market report video for today, 22nd Jan 2025 for the Indian stock market in terms of Nifty and Bank Nifty. First, quickly let's see what happened yesterday. If required, please pause and have a look. Here, this blue curve is Nifty's rate of change in price movement compared with some major index. In the early morning, if we compare with China and Japan index, only Nifty was volatile. And the same way in the afternoon, if we compare it with UK FII, that was very steady. On the other hand, Nifty had a huge negative pressure. I understand Trump said he is going to impose 100% tariff if BRICS country created common currency means. But in that BRICS countries, China is the one proposing for new currency and Chinese market was very much stable more than Japan market. In fact, Trump particularly pointed out that he is going to impose 25% tariff on Canada, but in the last 2 days, Canadian market had been keep on increasing. They don't bother at all about the Trump speech. Honestly, I don't know why Indian market behaved so violently and reacting so negative for one person's speech. It really makes me worry. Are we that dependent on US? Anyway, all the major 13 sectors closed negative and the surprising part is reality was the major dragger down over 4% despite it was completely independent of US. And overall, 68% of the listed stocks closed negative and 30% closed positive. Then in the derivative market, both FII and proprietary traders increased their negative stance. More negative than last Friday's status. In the index option market, yesterday the percentage difference in proprietary traders open interest that makes more money if the market goes down increased to 7.6%. In comparison, on Monday end, it was only 2.7%. Then in the future index market, FII strongly maintaining their 83% short position. And not just that, in the cash market for the 13th session in a row, FII was mega net sellers. As a net, roughly they sold for near 6,000 crore rupees in one single day. As usual, fortunately, DIA net bought over 3,500 crore rupees, which kind of to some extent supported the market yesterday. Just for info, in January month alone, so far FII net sold for over 56,000 crore rupees. Those were the quick takeaway from Indian market. Then coming to US market, they are on the dream run. All those Trump statements and the executive orders made all three major index in the US market to close positive. Dow Jones increased 1.24%, S&P 500 was up by 0.88% and Nasdaq was the underperformer because of the weakness in Google and Apple but still was up by 0.64%. So US VIX decreased near 5% and moved to 15. Regarding oil, it didn't move much. At the time of this video, WTI crude is trading near 75.5 US dollars per barrel and Brent crude traded near 79.5 US dollars per barrel. Regarding Indian ADR, it closed mixed. Infosys and ICICI Bank ADR was negative, whereas Wipro and HDFC Bank ADR closed positive. However, if we calculate the arbitrage, both the IT stocks indicating the positive opening of over 1%. On the other hand, banks having some negative bias. Then Reliance GDR closed negative in line with Indian market, no fresh movement. And for GIFT Nifty, it didn't change any compared to what it was at the time of yesterday closing. Early morning it traded around 24,143, equating that with the spot market, it's indicating flat opening. However, at the yesterday closing time, the unusual thing, premium was over 100 points. 100 points premium having only one more week expiry is unlikely to sustain. So possibly for now, it's indicating flat to 50 points gap up opening. But will it sustain? That's the question mark. So that's what happened in the dollar market. Now let's discuss the stock specific info. Today in the aftermarket hours at 6 p.m., HDFC Bank is going to release their earnings. At present, as per Bloomberg, year over year, they expect the profit to increase 1% and net interest income to increase 9% and HDFC Bank to maintain the net interest margin of at least 3.5%. So in addition to this top line, like we discussed in the last pre-market video, market looking for the loan slippage and provision increase. If that was the case means, then it will be disastrous. Last year January, I still remember after HDFC Bank results, in the next two trading sessions, the share price dropped over 10% and crashed the whole Indian market furthermore. So let's hope it doesn't happen this time. Then second, yesterday in the aftermarket hours, world's biggest asset management firm BlackRock made an announcement that they're going to invest around 117 crore rupees on the Reliance Jio JV. I mean, 117 crore rupees is nothing, but materializing the partnership with BlackRock is the significant milestone. So today, Jio FinServ will be on focus. Third, regarding quarterly results, Dalmia Bharat, India Cement and Ultratech Cement, all those cement companies, according to me, posted not so good results. On the other hand, Tata Tech and India Mart looks like posted good results. So all those stocks will be on focus. As a summary, again another day, US market closed on the positive bias and Gift Nifty also indicating the gap up opening of 30 points. But as we discussed, will it sustain? Maybe because yesterday market dropped from 23,400 to below 23,100. Maybe there is a slight probable chance for the short covering. But again, we don't know how much FII is still going to sell. Then as per stock open interest, Dixon Tech, India Mart, Jio FinServ, Zomato and Balakrishna Industries got an increase in open interest along with a negative close indicates the short build-up. On the other hand, UBL, JSW Steel, Berger Paint, HCL Tech, Dalmia Bharat and Colgate Palmolive got an increase in open interest with a positive price close, which means these stocks got the long build-up. About the things to look out, HDFC Bank, Hindustan Unilever, Bharat Petroleum, Coforge, Gravita India, Heritage Foods, Lakshmi Organic, Persistent Systems and Pidilite Industries are some of the major Indian companies' earnings results are still released today. And in terms of macro, during our market hours, there is nothing that I'm aware of is still released. Then in the night, 20-year bond auction, weekly crude oil stock and mortgage rate and application are some of the things we need to keep an eye out today. Coming to technical, as we discussed earlier, Nifty opened 80 points gap up. However, it was volatile with high selling pressure and closed down at near 23,050. Thus, on the daily chart, Nifty formed a long bearish engulfing candlestick pattern which engulfed all the narrow range movement that Nifty made in the last 6 sessions. In addition, RSI momentum indicated sustaining their negative stance and Nifty moved closer to the lower Bollinger Band line. Hence, technically it's indicating more negative trend. So, if Nifty fails to defend the 23,000 level in the upcoming sessions on a closing basis, then the selling pressure might push down further towards 22,800 where the immediate support is, then followed by 22,600 the next support. On the higher side, 23,200 to 23,300 is the hurdle zone. In case of Bank Nifty, it opened 180 points gap up and similar to Nifty, it also failed to build on the opening gains and closed down at below 48,600. Thus, on the daily chart, Bank Nifty also formed a bearish engulfing like candlestick pattern, sustaining below all key moving averages. However, one positive thing, unlike Nifty, Bank Nifty took support at upward sloping support trend line. Hence, the immediate support is at 48,300 and if this level breaks, Bank Nifty could further decline towards 47,900. On the options front, the maximum call option open was at 24,000 strike, followed by 23,500 and 23,400, with maximum new call option writing at 23,500 strike, and then 23,400 and 24,000. On the put side, the maximum open was at 22,500 strike, followed by 22,400 and 23,000, with maximum new put option writing at 22,400 strike and then 22,500 and 22,450. Thus, from options data, Nifty is expected to have key resistance at 24,000 level with key support dropped to 22,500 from previous 23,000. So that's all in this video. Hope you all got some information. Please consider subscribing the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.